Hello guys! Today we're gonna talk about income statement. So what is an income statement? The income statement, also called the profit and loss statement, is a report that shows the income, expenses and resulting profit or losses of a company during a specific time period. The income statement is the first financial statement typically prepared during the accounting cycle because the net income or loss must be calculated and carried over the statement of owner's equity before the financial statement can be prepared. The income statement calculates the net income of a company by subtracting total expenses from total income. This calculation shows investors and creditors the overall profitability of the company as well as how efficiently the company is at generating profit from total revenues. Income statement example. Okay guys, let's have a look. The standard income statement looks like this, yeah? So let's think or assume that you have a company and you need to do income statement for 1 month. So assume that your earnings during that month, total earnings, revenue, is $2,000. Cost of goods sold means that how much money you spend to purchase that good or materials to make that good, which you already sold, the goods which have been sold. So we assume that we sold goods for $1,000. So gross profit is a minus here. Gross profit will be equal $1,000. Now we have our operational cost, which is separate from the cost of goods sold. So we spend money to our salesperson, yeah? We pay wage, 1 month's wage, we assume that it's $200, yeah? Then we paid, for example, rent of that place, another $100, yeah? Another $100. And so on and so on. So total operational cost will be, again, assumption, yeah, $300. So the earnings before interest and tax will be equal $700. So now you have a loan which you pay every month. So you pay loan $200 per month. So minus 200. So your earnings before tax will be equal $500. So how to calculate tax? Tax will depend on this amount of money. And if your tax payments, for example, in America it's 25%, in Kazakhstan it's 20%, and depends on the tax regime really, but assume it's a standard tax of Kazakhstan, which is 20%. 20%, yeah? So 20% of $500 will be $100. So our net profit is $400. So our net profit, clear bottom line, which will be left in your pocket, is $400. So let's talk about common income statement questions. So what is considered an expenses on the income statement? Expenses are outlays of resources for goods or services. This cost includes wages, depreciation, interest expenses, amongst others. They are reported on several sections of the income statement. For example, cost of goods sold expenses are reported in the gross profit reporting section, while the operating expenses are reported in the operations section. Another question, how do you calculate the income statement? The income statement is used to calculate the net income of business. So the revenue minus expenses equal net profit. If revenue is higher than expense, then net income will be positive. And vice versa, if revenue is less than expense, net profit will be negative, which means company is in a negative point, in the negative side.